Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial. Thanks for joining me today. Glad you are here. All right, today we're going to talk about what I look for when evaluating mutual funds and ETFs. So kick back. I'm sure this sounds like an exciting listing today. Maybe some of you out there might think so. But I think it's important to kind of talk through and just have conversations about what the criteria is for choosing different investments. There's a huge universe of investments out there. You can invest in, tens of thousands of mutual funds, stocks, bonds, other types of investments. So it can be very confusing for a lot of people. And I want to also be very careful and preface this by saying that this is in no way investment advice at all. This is not meant to be specific investment advice. Please do not make any specific important decisions based on, this today. This is strictly educational and informative and meant to be an illustration or an example of what I use when I'm evaluating investments in mutual funds and ETFs, and whether people might use as well, and kind of what it might look like to have a process for evaluating funds. So please don't take this as specific advice at all. This is simply an example for educational purposes. So be aware of that. So there are some things I look for when I'm evaluating mutual funds. One of my jobs as an advisor is to manage investments for my clients, and that involves choosing funds and monitoring funds and tracking funds and making sure that the funds in my clients' investments are appropriate for them and make sense based on their overall financial plan. And this is definitely not a one size fits all, and it's not a definitive predict the future kind of thing, but it is a general, kind of process or a set of guidelines I follow when I am looking at investments. So some of these are a little more specific to my practice. Things like the ESG factors I'll talk about. Those are specific to me and a lot of my clients. They may not be as important to you. Some of them come from some different methodologies, including the FI 360 fiduciary score methodology, which is kind of a proprietary methodology from Broadridge that scans and screens and analyzes different funds for different factors. So some are subjective, some are more, more quantifiable. So overall, these are the things that I look for when I'm choosing mutual funds, when I'm evaluating whether I want to use or include a specific mutual fund in portfolios. So this is some of the criteria that I go through as an example. So the first thing right off the bat, I'm going to say may not apply to everybody, and that is ESG criteria. And I've done a whole episode, I've actually done multiple episodes on ESG, which is environmental, social, and governance. And this is the practice of evaluating investments through the lens of making an impact in the world in different areas, including the environmental impact, the social impact, and the governance impact. So some examples of this might be funds that exclude fossil fuel producing companies or fossil fuel industry related companies from their investments, excluding companies that have controversial or problematic issues with social justice, for example, or things that align with these particular aspects of ESG. So that's what I look for right off the bat. So again, this is my practice specializes in ESG. My clients, many of them more and more appreciate that type of investing. And so the first thing I'm going to do personally, or at least at the top of the list, is to look for ESG factors. And specifically, I look for ESG funds that are impact related. They are specifically making an impact beyond just negative screening or positive screening. I'm looking for funds that actually have some level of advocacy and impact in the fund mission. So these, for example, these are funds where the fund leadership will actually interact with companies they hold and encourage them and lobby for better behavior in certain areas. For example, being better about environmental factors or becoming carbon neutral by a certain date. Those are the types of funds I'm looking for as part of the mix. I'm not crazy about just doing negative screening. A lot of ETFs, for example, they're just simply negative screens. They just say, well, we're going to exclude some fossil fuels and we're going to call ourselves ESG. And there's a spectrum and a whole argument to be had about greenwashing and what that means. And I'm fairly opinionated and grumpy about this in general. So I'm going to try to step off the soapbox about that. But a lot of funds out there, especially on the ETF side, I feel they tend to kind of greenwash and just pretend to be ESG, but they don't really go as deep as some of my clients and I want to go with the impact. So I'm going to be looking for funds that align with ESG values and that truly make an effort to make an impact in the world. So that's one thing I'm looking for. Again, may not apply to everybody, but for me and a lot of my clients, that is a factor we want to look at. So beyond that, let's get to some more, I guess, more neutral types of factors. I'm also going to be looking at the track record. If I'm looking at a mutual fund or an ETF, I want to see a fund with a track record of at least 3 years. Longer is better, but at minimum, we want to see a fund that's been around for about 3 years or more, showing some longevity and some reliability. I'm also going to be looking for low manager turnover. I want to see fund managers, at least the senior manager, in place for at least 2 years or more. I want to see there's some stability on the organization, not a lot of turnover between managers. That shows that the management, first of all, is the stability of the organization overall is strong, and there's some consistency year over year with how the fund is managed. So I want to see that low manager turnover if possible. Assets. Next, I want to see that the fund has at least 75 million in assets, and this can be across all asset classes. But we want to see that there's at least kind of a critical mass of assets in the fund. It's not just a very low asset, thinly traded fund. We want to see that it's established. It's got some momentum and a certain level of asset holdings in the funds across all the asset share classes. So we want to see that minimum level. Again, show some stability in the fund. I also want to see that at least 80% of the investments securities are consistent with their overall broad asset class. So one example would be if you're looking at a large cap growth investment, it shouldn't hold more than 10-20% in cash, fixed income, international. I want to make sure it stays true to its overall broad asset class. So we want to look for that because that is important when looking at creating a portfolio based on asset classes. We want to be able to know that the fund follows the appropriate asset class that we expect it to. I also want to see that it's highly correlated to the asset class of the investment itself. So, for example, if you look at the Morningstar kind of boxes that are pretty common reportings, you want to see that the fund is matching the peer group of its investment. So again, if we're looking at large growth or a particular type of asset class, we want to see that it matches its peer group at that particular level. I also want to look for Sharpe Ratio. I want to take a look at that and evaluate that against its peers. Typically, a higher Sharpe Ratio is going to be what's thought of as better. That's kind of what we look for. The Sharpe Ratio signifies risk-adjusted return. And the higher the Sharpe Ratio, the higher the risk-adjusted return. That's a favorable thing. So if you're looking at multiple funds and one has a higher Sharpe Ratio than the others, that's something favorable we would look at and want to favor. I would also be looking at performance. Again, performance is not the top of the list because it's very problematic to pin everything on historical performance because that doesn't predict future returns, as we know. But I do want to at least see that there's some consistency in performance relative to its peers as well. So that is going to be a factor, not the overarching factor or the most important thing or top of the list necessarily, but we do want to see that there is some consistency and some reliability in performance relative to its peers. I also want to look at expense. So I definitely do not put expense at the top of the list. Many people do, and that's okay. A lot of people say that the expense of the fund should be the most important thing. Buy the cheapest funds out there, and that's what you do. I don't subscribe to that necessarily. I think you do want to keep expenses down, but I think many overemphasize expense ratios, and so the expenses of the fund should be evaluated. But I wouldn't say that you automatically exclude funds with higher expenses. There may be reasons to choose a fund with higher expenses when you look at the overall fund as a whole, holistically. So yeah, I do look at expenses. I do want to see the fund is not outrageously priced. The expense ratio isn't ridiculous, especially compared to its peer groups. I want to see that in its class, it's on the lower end of the expense ratio if possible. But all of the things being favorable, it's not something that's going to necessarily exclude a fund if it's reasonable. So that is something we want to look at, or something I look at, but again, it's not the top of the list of the most important things. So those are kind of the general, or that is the general starting point list of things that I'm going to be looking for when evaluating mutual funds and ETFs. Beyond that, there is some subjective, I'm having a hard time saying the word subjective today, subjective information I might look at as well. So this is very personal to me and some of my clients. So again, this is not meant to be taken as advice at all, or maybe not apply to you, but I'm going to look for fund managers that are women, minorities if possible. I think the industry is way too white male dominated. And I think for me personally, I like to see a fund that has, women and minorities as fund managers. So that's something that's just very personal to me. It may not matter to everybody. I look for a track record of the fund manager, and you get that longevity we've already talked about, going back to that. And so those are some of the things that I'm going to look at overall. So I think a lot of people, this came up actually because there's a Facebook group I'm in that I participate in related to investing and financial planning. And the question was asked, hey, how do I evaluate or review mutual funds? And, a lot of people gave kind of the typical answers like, oh, low cost and just pick, this index fund or whatever. They didn't really go very deep. And I thought it was useful to have the conversation around, hey, there are some criteria that I think are useful to evaluate and see if they make sense for you. There are some, specific things that kind of point to reliability and at least, favorability as compared to peers in mutual funds that could be useful for you. So I'm hoping this gives you at least an example of a methodology or some factors that you might consider if you're evaluating mutual funds and ETFs. Again, not specific advice, so don't take it as such, but more of an example, more of an educational, informative kind of discussion today. So keeping it short, that's what I got for the day. So as always, if you have any questions, you know where to find me. You can find me on my website. That website is elevationfinancial.com. You can reach out and send me a note there. And as always, if you'd like to book a complimentary money session online, that big friendly button will guide you there, and you're welcome to grab a time for us to chat. So with that, as always, thanks for joining me today. Appreciate you being a listener. Have a great day. See you next time.